This is Vee Trades, and today I'll be doing a technical analysis breakdown for Virgin Galactic Holdings. The last time I did a video on this company was back on July 10th, so I have a few weeks of price action to address. Before we begin, please take a second to give the video a like and subscribe for more chart analysis. Also, thank you to those who already subscribed and like my videos. It means a lot. Just a reminder that I have no positions in this company, so I'll give an unbiased viewpoint. We will start out the technical analysis by going over what I see on the daily chart and potential price targets. Then we will wrap it up by looking at the long-term pattern on the weekly chart. So the first thing that I'm going to do is put a vertical line on where I left off for this company, which was on July 10th. So it looks like it was on the weekend, and then we dropped down on that following week because of the price action, not because of the news. The news was actually pretty good. I remember Richard Branson actually made it into a space and it was a successful flight. However, the price still sold off. Why? Not because of the news, because of the technical analysis. In the 21st century, information is just instantaneous, so the only thing that's reliable is the price action, not the news. Maybe back in the 50s and 60s or even the 70s, the news was a good indicator of where price would be heading, or if that would be like a good signal to buy or sell. But now technical analysis is what's needed to make a high probability decision. So back in my video, I said that we could retest that high back in February, which was like the $63 level, because of this uptrend channel. As you can see here, this blue channel. However, price cannot meet it because a different pattern played out. So we were following this channel really nicely. We got a couple bounces here. The midline is acting as resistance. We sold off, came back up, and now we had this overshoot right here. And if we have an overshoot on one side, we're probably gonna get an overshoot on the opposite side. So we had the break, and now we're probably gonna price was trying to go up to retest that high, but it failed. Why? Because there's another pattern in play. There's a stronger pattern that took over, and it's this range right here. So now price is probably gonna follow this range rules instead of the channel rules. So this is the range. I'm gonna go and change the color. Let's make it red. You can see here price is inside this range now. That's why we found resistance right there. Came up to these highs, was too strong, and then we sold off. And also because if you take a closer look at the price action around that level, price was super extended from the EMA, and then we dropped off, and then tried to go up once, it tried to go up twice, it tried to go up 2 times. So if the market does something twice and it fails, it's most likely going to do the opposite. That's just the rule of the markets. The market moves in twos. So it tried to go up twice and failed, and it trapped all the longs who thought we would also make that new high but couldn't change their bias, and then stopped them out, and it filled in this gap, and it's continuing lower. Now, since price action did not respect the channel anymore, it looks like it's respecting the range. I expect lower prices to come because of a few reasons, such as this gap right here. There's a gap right here and a gap right here that looks like price wants to fill. So there's 2 gaps price wants to fill, and also this channel that's currently, it's played out. So let me show you guys a second. So all these bars were in a channel right here that fits pretty nicely. I'm gonna zoom in a little bit. So all these bars fit inside of this channel. However, we had that break outside and a move to a new low, and that's why we're seeing this sideways correction. Price doesn't know what to do, to continue to go lower or reverse from here. However, what they could do is just break out to the high side and trap in the longs and move the market lower, because that's what they're gonna try to do. They got to create these traps to use to move the market in the direction that they want. So if they trap in the longs, what do they have? Longs have sell stops, right? So if they run the market back to the lower side, all the sell stops are going to get hit. So it just adds fuel to the fire. So that's why you're going to see a bigger push down. So that's what they'll probably try to do. Usually they break out counter bias and then trap in everybody, and then drop the market down to move it where they want to, which is to try to fill in these gaps right here at the 23 level and like the $16, $17 level. So my target that SPCE can reach is the $15 level. in the coming weeks or months. However, my long-term target is this measured move here. This was the first leg down, and we came up short to the high, so this looks like the second potential leg, and it's at the $9 level. Now, before anyone starts like throwing a hissy fit saying, oh, you know, like, oh, he's bearish, blah blah blah, I mean, this is just a target, you know, we don't have to reach it. We could just start trending up from now on, but I'm just thinking in probabilities here. The market just came off the highs of the range, so most likely we're going to the lows of the range. The market has a couple gaps to fill, so that's what it's trying to do here. That's why we had that move down. Why didn't we just continue to go up? Like, you know, but look at what it's trying to do. It's kind of trying to come back to filling these gaps, the lower side of the range, meet this measured move. So if the price were to drop to this measured move, it would be about a 60-70% drop. So that's pretty much everything I see on the daily chart. I see that we had that move down, we're moving sideways, so that could be a continuation pattern. We will probably break out to the high side just a little bit, maybe back to the $35-$36 level before they drop the market again to these lower levels. It's good news for people who have positions and people who don't, because if you don't have positions, now you probably can wait and find a better opportunity to enter. And if you are one of those long-term investors, hey, now you could pick up a few more shares at a discount. So I'm gonna go ahead and remove all the drawing tools and show you guys what I see on the weekly chart. So what I see on the weekly chart is pretty much the same thing. I'm gonna go ahead and put the range up. See, on here it looks a little better. You can see that the highs are matching up at the closes of the candle. That looks pretty nice. And if I drag it down, that's the lows of the range, and you can see the midline is acting as resistance. See how we dropped down past it through the EMA, we pushed through it and we pulled back and found resistance at the EMA and the midline, and we sold off to the lower side of the channel. So that could probably happen right here, or like a repeat pattern. We had a push down through the EMA, we could pull back slightly above it, test the midline, and then trap in the longs and then drop it down, because there's this gap right here, and this is the lower side of the channel that price moves between the highs and the lows of the range. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised on what you could learn. Leave a comment down below on where you think prices are headed. You know, it's nice to hear other people's opinions. You know, I want to see what you guys are thinking. Also, share the video if you want to help your friends out learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time. Bye.